What's going on, everybody? It's your boy C-Zar, and we are talking about Reactive Network today. React. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. The last video I made for Reactive Network was on the 25th of October, and here we were talking about the prospects, and I was saying I was hoping I was wrong, but the prospect that the video that I made, the last call that I had, was that we'd move down to about 7.5 to 6.5 cents. Well, here we are at 5.2 cents. We're a little bit lower than I thought, but we did move up a little bit first, right? I had some people saying nana nana boo boo in my face, but it wasn't shortly thereafter that, well, the whole damn market kind of corrected, right? It's not just Reactive, it's the whole market. And really, you were doing well while the rest of the market was doing kind of bad for most of this time. So kudos to you. However, unfortunately, for the Reactive community, I have some bad news. I do think that we go lower. And I'm not trying to make enemies. I don't hate your coin. I don't know much about Reactive. I know that there's a lot of hype around it. I know that people are excited about it. Some people that I follow even, and that I respect their opinions. Therefore, I would encourage anybody who wants to invest in this project to do their own research. Not financial advice, not a financial advisor, but make sure you know what it is you're investing in before you invest in it, right? Unfortunately, with this low, all-time low to this high of this move's Fibonacci retracement, unfortunately what we've done is something that I think is very bearish with the Fibs. We have found support at the 0.5, which is nice. We've actually, what we've done is really shown respect at all these levels. We found support at the 236, found support at the 382, found support at the 0.5, right? Found resistance at the 382. We've shown a lot of respect throughout this range for the Fibs. 0.5, 382 rejection, now you're below the 0.5. Statistically speaking, it would be the most probable outcome to go down to this golden ratio zone, which is at about 4 cents to 3.4 cents. So you're at 5.2 cents now. Let me say it again for the people in the back. We're probably going to go to 4 cents or lower, probably. Now, I'm wrong if we get above this high. I don't care if you close above it, I don't care if you wick above it. If you get above it at all, statistically speaking, the probability that we go down here diminishes greatly. As long as it's not a fake out. I mean, if we got just above that high and then we reject it back down, okay, maybe there's still a chance. But odds are, if we were to go above that high, what you have here is a double bottom setup, right? That's probably what it is, and you have a W shape. So if you get above that, you're also getting back above your 382. That's productive. You know, ultimately, if you really want, if getting above this high doesn't solidify this as the low for you, ultimately getting above the 236 should. So getting above about 10 cents should solidify whatever low as the low. I don't care if it's here, I don't care if it's there, I don't care if it's there. Whenever we get above this red line, the 236, nobody can argue. It's indisputable that we are moving higher, or moving higher than this high, and that whatever low we have established is the low. However, again, with this Fib sequence happening the way it is, I wouldn't be surprised if we went to the golden ratio, and truth be told, guys, not financial advice, not a financial advisor, I wouldn't be surprised if we went lower, right? Let me explain this. Okay, I've been doing technical analysis for 10 years. I have been using the Fibonacci retracement tool as my bread and butter with this technical analysis, okay? So I want to share with you my thoughts and what I've noticed in my time. Typically, you get a high to low move and you're retracing that move doing whatever. Typically, the golden ratio is where you find support. You will, even if you go lower, you will at least find support here before going lower. It's very, very difficult to break through the golden ratio on the first attempt. Most of the time that doesn't happen. It does happen. It's not like this most rare thing if you ever break through the golden ratio. Oh, this is so rare, that means we're going to zero. No, it's just not the common thing, right? 60% of the time or more, you bounce on the golden ratio at first, but there's still a 40% chance or less that we could go through the golden ratio, like a 20 to 40% chance depending on the dynamics here. Typically when you retrace, you go from the, maybe find a little bit of support at the 236, whatever. You'll see the 382 find support, 236 find resistance. You'll kind of work your way down. You'll see the golden ratio find support, maybe find resistance if you're moving down. It'll be like this, right? But if you run through to your 0.5, like we did here, if you find significance at your 0.5 and then you try your golden ratio, these are the moments that I most commonly associate with breaking through the golden ratio on the first attempt. Still, even in these moments, the statistical probability of finding support at the golden ratio is greater than going through it, but the chance to go through it is greater now than it would have been if we were at the 382 and then breaking down, right? It's different. And of course, you're going to interact with the 0.5 before you get here. This level's above it, but that's not what I mean. I don't just mean passing through it. I mean finding support like this. This is typically the behavior that we see when we do break through the golden ratio on the first attempt. Now, there's good things and bad things about that. Let's start with the bad news. The bad news is, from a percentage form, you're at 5.2 cents now. That's a big drop. That takes you below 3 cents, potentially even down to 2.2 cents. That's pretty big. That's a pretty big drop. That's the bad news. The good news is, from a high point to a low point, this would be an ABC correction. ABC corrections are pretty symmetrical, and it just works out perfectly. ABC corrections imply that this is a higher low. This was a corrective move on what is overall an upward sloping dynamic, and you should return to higher prices, new all-time highs, inevitably. Okay, maybe not like this, but inevitably you'll get there, right? It'll probably be faster than this. Mark my words, if you do move all the way down here to get back to your current high right here, it will take less time than it did back here. Does that make sense? It will. I'm very confident of that. Second to that, and not financial advice, not a financial advisor, but again, being that the fibs are my bread and butter, I've been doing this for over 10 years now, what I've noticed is that when you do break through the golden ratio on the first attempt, rarely, and this is rare, this is like less than 10% chance, maybe a 10% chance to happen. It's very, very uncommon. But when you do break through the golden ratio on your first attempt, rarely do you go through the 1272 to the 1618. And you might be thinking, why is that a good thing? It's a good thing because that's the rare thing. In other words, when you break through the golden ratio, the most common thing is you find support here. And here's the best part. You typically recover to the 0.5382 or even to the 236 and beyond. You can see rapid recovery, high velocity volatility is what happens 90% of the time when you tear through the golden ratio. There's a very small chance that that could be detrimental and sends you here, and if that's the case, this thing is done. It's toast. But that probably doesn't happen, right? That very likely. I'm not calling for that. I'm just letting you know technically it's a possibility. But breaking through the golden ratio on the first attempt without finding support on it at all, it's actually a more bullish sign than it is a bearish sign. Typically, you see some adverse reactions there, very volatile reactions. So I would think even if we do go down to 4 cents or below or 3 cents or below, the amount of time that you spend down there, very short-lived, right? If you find support of the golden ratio, cool, it's very short-lived anyways, but you should be back at these same prices and even above them sometime in January, I would guess, no matter what comes your way between now and then. But I don't really have anything else that I want to say. I mean, we've just done a lot of fib work. Let's do some standard TA that I normally do. 1 hour time frame, we'll look at our indicators. You know, the RSI, it's got a kind of uptrend right now. You do have these like higher lows and higher highs, but you're finding resistance at the overbought zone. I don't really like it. I think you are going to come down, right? When you found support here, this is what it looked like. This is what it looked like. This is what it looked like. Now, what are you doing? This is different behavior. Different behavior begets different results, and you might break out of this to the downside. The 1 hour RSI overall is bearish. At the moment, there's a bullish posturing to it. You do have a bit of a flat top with sending highs or sending lows. That's nice. Maybe you do get a little pop here, but I'm telling you, if we move up at all, it's going to be a bull trap, and it's just going to send you down lower. Not financial advice, not a financial advisor, but if you're looking to buy React and it pumps without you, do not FOMO. It will likely go lower than this low. You likely have a date with destiny below that low. Absolutely you do. Stochastics look bearish, and the MACD technically has a bullish posturing now, but you're choppy and sideways, so I'm not going to weigh on that too much. The 4 hour time frame here is very bearish. You've broken out of your downtrend here, and now you're forming a sideways trend. That's kind of nice. You could come up. Again, there are some signals from here that before this move down, this ultimate move down happens, that we could move up from here. So with that being said, from a high to a low, should we move higher, the expectation should be that you go anywhere from about 5.6 cents to maybe, what is this up here? 6.5 cents. 5.6 to 6.5 cents, that should be easy to remember, right? Somewhere in that range, that could be where we go. Lower high, down, right? Bearish bull trap, down. That's my thoughts. We look at the indicators. RSI gives me a little bit of hope. I'm not going to lie. I'm a little bit more optimistic on the 4 hour RSI than I am on the 1 hour RSI. Stochastics look good too. And the MACD is bearish overall, but you are building bullish momentum. You look somewhat good here. Again, I wouldn't be terribly surprised if we just dropped from here. But at this point, I think calling for that 5.6 to 6.5 cent zone, I think that's very warranted. A lower high, and then we move lower. Okay, lower high, and then we move lower. Daily time frame here. Looking at this, we actually have built some bullish momentum. We crossed red. We're actually at a point where we might provide a bearish or a false cross, and that again, guys, this could be a bullish setup that signals that this is a double bottom, and maybe we are in a W. And if that's the case, all my lower targets are wrong. And the best way to do that, the best way to invalidate me, get above this high. If you disagree with me, if everything that I've said about Reactive today has upset you, you're like, this guy doesn't know what he's talking about. He doesn't know Reactive. It's so bullish. Yeah, there's plenty of cryptos that are bullish. They've been dumping for months now. You know exactly what I'm talking about. Anything can happen. If I'm wrong, You can rub it in my face once you're above 7.6 cents. But before then, I don't care. If we move up here, I'm not wrong. If we move up here, I'm not wrong. If we move up and we stop just below this line, I'm not wrong. You have to get above this high at just any kind of degree at all, and then I'll wave the white flag of bearish surrender. At that point, we become increasingly bullish. Understand, if I'm wrong, and what you're doing here is a double bottom pattern, first off, you've got an Eve, and this could be an Atom. An Eve and Atom pattern is one of the most powerful double bottom signals you can get. Not to mention you have a very deep W here. So whenever that breaks, if that shifts, you should be rallying all the way up to where this W began and just beyond there, okay? We become immediately bullish as soon as we get above this high. So that's what it would take to prove me wrong. Until then, I firmly maintain the stance. I think that we're in a ABC correction, and we're either, and the C leg is typically symmetrical with the A leg, but it can be shorter. Typically it's not, but it can be. The destination is either 4 cents to 3.46 cents or 2.8 cents to 2.2 cents. Somewhere in that range. Likely not in between. Likely this range or that range. That's it. And we'll go from there. I got nothing else, guys. Hit the like button, subscribe. Thank you all for being here. There are some bullish implications. There are some signals that we move higher, but overall, I am bearish on this thing. Overall, I am bearish. So I'm not going to get excited by any movements up. And while I am calling for a short-term move up that might go to 5.6 to 6.5 cents, don't hold your breath over that. It's very possible that we just drop from here. Ta-ta. Bye-bye. See you later. I guess I could give you a little bit of optimism real quick before we end the video. Let's just see if we're respecting this first. Hold on. Because if not, it won't be worth it. I think we're showing respect here. Okay, that's good. So, yeah, I mean, you tipped your golden ratio. It looks perfect. So, being that you are showing respect on this, let's say you do go down. Maybe you go down to your 236 all the way down to 3.3 cents, whatever. Maybe you do that. However low you go, when you do find support, whenever you do return to new highs and you break out to new all-time highs altogether, Reactive's next target area to get excited about is 56.4 cents to $1.45. That's your next area. That's your primary target zone, the 1618 to the 1272. So if you're thinking that I'm wrong and you want to put money where your mouth is, you know, you could be setting yourself up for a 10x to a 27x, 28x move. And I thoroughly believe Reactive will go up here at some point in 2026, maybe in Q1, maybe in Q2. But before then, I think we drop a little bit more. And if you wait, if you're patient, and I'm right, let's imagine that we go to 4 cents or lower, right? Because that's kind of what the expectation is, 4 cents or lower. Then that 10x move turns into a 13, almost a 14x move, right? At any rate, if you buy here and the price drops, all I'm saying is just wait, man. Just wait. You're going to be fine. Don't panic sell. That's for damn sure. If you didn't sell here, you have no business selling here. You have no business selling here. Does that make sense? Right? If you didn't buy here, you have no business buying here. You have no business buying here. And look at how much sense that makes, right? It's the same thing, but to the opposite effect. It's almost like looking back in time gives us somewhat of an advantage to safeguard ourselves against emotions. And then guess what? If I'm wrong, if I'm being a smartass for no reason and I'm just wrong, and you guys get to rub it in my face, that's great, because we become bullish right at this high. Let's imagine you don't even get in at that high. Let's say it breaks through and we don't even get in at that high. Okay, you're all the way up at the golden ratio. Maybe you get in at 9 cents, which you're at 5.1 cents from now. That's a huge difference from here. You're up at 9 cents before you actually get in. You were with me and we were wrong. Still from there, you have 6x potential to 16x potential for your next target destination. So it's still phenomenal. You really can't lose with this thing, whether you buy and you sit through the pain, whether you wait for the pain and then you buy here, or you wait for it and you're wrong. You really can't lose. There's tremendous opportunity no matter what, but you just have to be apprehensive to the price action. And do not panic sell. You're not going to make any gains if you're out of the game. Hit the like button, subscribe. Thank you all for being here. See you on the next one, okay?